Well, good afternoon, everybody. It is Monday at 2:23 p.m., middle of the trading day. A little bit strange for me to do this, but I wanted to put a video up pretty quickly about rumors of what's going on with the Clarity Act. So I saw Eleanor Terrett, who's been arguably the best reporter on this beat, make a point that Clarity is moving towards a compromise that will include no yield on stablecoins or even rewards on stablecoins that are held. That rewards will have to be based on transactions. And I think it needs to be said that that may be the single most bullish scenario for Bitcoin and arguably for crypto assets as well that could possibly emerge from this debate. I'm not going to argue that it's good that banks get a little bit of a reprieve in terms of lower competition. I certainly will not defend the banks in what they're saying here, but I think it is extremely important for people to look through the forest for the trees here because it is not priced in. I mean, you could make the argument that Bitcoin breaking through 74,000 and right now it's 74,216 or thereabouts, 211, whatever. Obviously, it changes every second. But Bitcoin breaking through that 74,000 resistance level may very well have something to do with these rumors. Personally, I think it's not even close to priced in. Consider what it means. It means that stable coins held without movement in an account will not be incentivized by yield. So if the people who are using stable coins offer investment options at the same time, and we all know Kraken's going to do so with their banking license. We know Coinbase is going to do so. We know Morgan Stanley is going to do so. And frankly, I think it's pretty likely that every community bank platform will do the same. You'll have a situation where the payment accounts will continue to pay very little interest, but because you can move in and out of investments like Bitcoin, or frankly, any crypto, or any tokenized equity instantaneously, it means you don't have to keep nearly the cash buffer that you used to keep. What does this mean? This means that anybody who wants to implement a strategy such as I do, which is Bitcoin for saving and dollars for spending, all of a sudden will gain access to the platform of choice, all of which will enable this to happen in real time. Think about the implication. The implication is that without stablecoins paying yield, it's one less competitor to holding Bitcoin for people who want the long-term savings. Now, will people do that on day one? No. Frankly, I think more people will use vehicles like STRC to gain yield on whether it is their cash or treasury balance or need, spending for the next several months. But it opens up the Pandora's box that provides for Bitcoin to be used for saving. Now, why am I obsessing about this and why is it worth the video? Well, because of the two words that arguably have captured most of the attention of the media: agentic AI. If you're an AI agent and you believe that Bitcoin is the best savings vehicle, and you know that stablecoins will be the best spending vehicle, then you're going to have access to be able to move between the two on a variety of platforms. AI agents are likely, and in fact, if you talk to them and ask them, they're likely to save their cash balances, the ones that are retained earnings in Bitcoin, without even having to instruct them to do so. And as that economy grows, the demand grows. People are underestimating how important this could be. I'll tell you that right now. Now, does that change where the price is going to be in the next week? Of course not. But understanding the second part of the title, why does this not really help banks? Well, it's obvious. Banks who right now have deposits, people hold lots of money in checking accounts and even savings accounts in their bank because they know if you have a brokerage account, it could take a day or two to move money from one place to the other. They also gain deposit insurance on different pieces of it, etc. But it's really about the time and effort to move investment money over. Well, when you take that away, because stablecoins will take that away, there will be no need for that. So eventually, companies will offer automated sweeps from one to the other. Now, I've talked about this before, but I think the banks really aren't paying attention here. Community banks will be fine. They're going to basically ask for their stable coins, to be the payment vehicle, but they're still going to want fractional reserve deposits so they can make loans, and they're still going to be able to pay interest to do that from people who have accounts where they might be borrowing. So a lot of these community banks have deposits from companies that actually borrow. So a company borrows money for their operations, and the bank says, well, cool, you put a significant amount of that before you spend it in your bank account. And so it makes their deposits more sticky, and you see that in the data. The point being that new money coming in is much more likely to go toward the Krakens, the Coinbases, and eventually the legacy firms who implement the same stack. All of this is increasing velocity. All of this is going to put more money back into the hand of savers. All of that will ultimately end up, some of it, going to Bitcoin as a savings vehicle. So that's what I have to say for today. It seems a bit redundant with all of the other comments that you keep hearing. But as Bitcoin gets more into the zeitgeist as a savings vehicle, the rule changes moving will matter. Because after all, when clarity finally passes, and I think the market still doesn't expect it to, it will allow all US banks, brokerages, etc., to fully enter this marketplace, which they have not done before. That means that salespeople who right now have no incentive to recommend any product besides IBIT, and even their ETFs are less profitable than others, will all of a sudden have the reason to promote these products. And that, frankly, as much as we don't like to admit it, will create more demand and increase adoption. So that's all I have to say for now. We'll talk again soon. For now, enjoy the rest of your day, and we'll check back in the next couple of days.